You're listening to Navid Moosa of the Mindset Movement.
Good day, good people. My name is Navid Moosa. I'm your host today and always for the Mindset Movement. New listeners, thank you for giving us a shot. We understand there's a lot of information out there, yet you choose to come here. So I thoroughly and humbled and appreciate that. For you repeat listeners, thanks for coming back. And hopefully we've learned your loyalty rather, and hopefully you're referring your friends and family to us. As stated in the past, here we cover the mindset of entrepreneurs, the mindset of small business owners, the mindset of anyone who has a 5 to 9 and you have a 9 to 5 and you want to get into your 5 to 9. We help you with that. We help you break through barriers. And one of the many ways we do it is education. Probably the best way to do is education. In April, we did a business in a box episode, which is basically we covered 4 weeks altogether of different types of entity setups like C Corp, S Corp, LLCs, so on and so forth. We did insurances, we did bookkeeping, and we did CPAs. So the very first week we covered S Corp, LLC, so forth and so forth. So today, please welcome my very special guest and friend, Barb Dietrich, attorney. Say hello to everybody, Barb.
Hello, everybody.
So Barb is, I've known her for a while now. She's set up most of all my LLCs. Any kind of entity I have, she's my go-to for anything real estate related. But Barb goes beyond real estate, not only real estate. She covers more items. So what we're going to do is I'm actually going to shut up and she's going to speak. And Barb, just real quick, just kind of introduce yourself, a quick background about yourself, if you don't mind, and we'll dig into it.
Very good. Thank you, Naveen. Thank you very much for allowing me this opportunity to participate in your educational series. A little bit of background about me. I practice in Pennsylvania. I'm Pennsylvania licensed, and I've been in practice for about 24 years. The last 15 of those, I've been a solo practitioner. My primary focus, as you sort of alluded to, is in the various areas of real estate and small business. I love the practice of real estate law. I do zoning, subdivision planning, agreements of sale, those sorts of things. I represent residential, commercial, buyers, sellers, lenders, and also small business folks, which really I have a true heartfelt feeling for, and to me it's very important to see a small business person that comes to me, to see them succeed, because the failure rate for small businesses is so high. I think it's important for me and other professionals to do what we can to make that business succeed and to help those business owners. So such as yourself, I like working with folks like you, and I like to take the team approach, which I'll just touch on a little bit later. So that's me.
Okay, cool. And I think that's probably why I thoroughly like working with you, because you do take a personal interest into my success, my team's success overall. It's not just, what do you want? Here you go. Here's your bill. It's not that at all. It's Q&A. You're digging into my business in a and not in a nosy manner, in a truly compassionate manner. Like, okay, what are you trying to get? Well, how are you trying to get there? Well, have you thought about this? I think one of the hardest things for business owners is that initially we go in with this full bravado. Here's what we're going to do, and take on the world every single day. And that's great. That's what makes us entrepreneurs. And so on. But at the same time, we don't know everything. We don't know all aspects of bookkeeping and legal and all this stuff. It becomes too much. But at the same time, as an entrepreneur, we don't have the finance all the time to be able to afford all these professionals to be at our beck and call, So it is good to have someone like you on my team. It is good to have you, someone who's just out there with good nature in your heart to help out. And not just realtors, just anyone who's in the business world, period. We have a lot of mutual friends who do different aspects of it. And every time I hear, who's your attorney? Barb. So, you're definitely doing the right thing. So
Thank you.
One of the things, oh no, you're more than welcome. One of the things I had discussed was the different entities that are set up. So the common one that everyone hears, everyone talks about when you're brand new is LLC, limited liability corporation. That's very common. Then there's S corp and C corp and LP and LLP and all that kind of stuff. Could you, and it doesn't matter what format you want to give it in, but could you break down either A, what each one is, or that the comparisons of them, just to give people out there who are watching this and listening to this, so they get a good understanding of how, some kind of direction on how their company either A, should be set up, or B, if it's currently set up, if that's the right setup for them.
Sure, Navid, I can do that. Um, I need to preface this with the fact that I'm just speaking in very general terms. Each state is going to have its own laws and requirements for different types of businesses. So before you do that, make sure you check with your own state's laws. Terminology is different depending upon where you go. So this is just for general educational purposes. And what I'm going to, it's not an exhaustive list as to what I'm going to discuss, but I want to give folks an overview of some of the issues that I look at and I ask about when somebody comes to me to start a business. And you've already laid some of that groundwork for some of the different types of legal entities, but I think it bears repeating just a few other items, and maybe you've covered these, and if so, I apologize, but I think they bear repeating. A saying that I have in my practice with regard to small businesses is that, for example, you could be the best widget maker on earth, and that's your passion, and that's what you want to do is make widgets. It doesn't make you a good business person. So listening to programs like these, educating yourself, I tell everybody, educate yourself on those business factors. So what you're doing for your listeners is an invaluable service for anybody who wants to start a new business. Some of the things that, again, you may have covered that you want to think about when you have a great idea, you want to get paid for it. I mean, we all want to get paid for what we love to do. But where do you want to locate? Are you allowed to locate? Are you going to do a home-based business? Are you going to get an office? Are you going to buy real estate? Do you have to get a business registration? You mentioned insurances. It's important to have the proper insurance for your business, a name for your business, a domain name. If you're going to go that route, are you going to have employees? Employees is a whole world unto itself. Do you have to collect sales tax? Do you not have to collect? So there's a lot of different things that are really individual. So, not to knock things like LegalZoom and those kinds of programs, but they're not giving you that individual service because every different business is individual and specific. And I think you've touched on this as well today. But if you're going to remember anything from listening to this today, is that when you start a new business, you need to engage an attorney, engage an accountant, engage an insurance agent, make them a team, a part of a team, which I know that you do, Navid. That's really critical to have that team available to you to ask the questions.
Definitely.
So now getting into the types of business entities, there's what we think of are four common types. There's the sole proprietor or sole proprietorship. There's partnership, and that may be a general partnership, or it may be a limited partnership, which I'll get into more detail. There are corporations, which you touched on, and then there are LLCs, limited liability companies, which are they're similar but different from corporations. And one of the things that I look at when somebody comes to me that I recommend that they talk to their accountant about, the type of business can really hinge on a couple of factors. What is the risk of liability to the owner for debts and for injury protection or asset protection? Are you running a trucking business which has a high risk of, for liability? Or are you, doing, I don't know, you're a calligrapher and you're making wedding invitations. I'm just sort of an example. That's a low risk kind of business. Another important key is taxation. What is the best tax structure or the best entity for the tax structure? Because the type of tax structure really varies depending upon the type of entity. And that leads to the next factor, which is similar, and that is the complexity of the organization. How complex do you want to be to run your business, or do you want to be it as simple as possible? Sole proprietor is very simple. And then the last factor is if you're planning to bring in other people as your business owners, what we customarily think of as partners, which is more of a common term for it. There's more specific legal terms. So if you're bringing in if it's more than just you, there are other considerations that we have to take into account, regardless of the type of entity that you decide to set up. So let's start with the easiest. We're really going to go from easier to least liability to liability protection.
Okay.
So the simplest is the sole proprietor, and as the name suggests, that is an individual opens a business owned by the individual. It's basically the business is that individual. It's the simplest form of business. You can use your own name. You can use what we think of, if people are familiar with the DBA or TA, doing business as, transacting as. Navid Moosa, doing business as Mr. Save a Home, for example.
Okay.
Your business profits and losses are all your own. They come through on your individual income tax. You have what's called a Schedule C that you would do. So they're all reported on your personal income tax. Now, there's no formal registration per se. You can just say, I'm gonna do calligraphy for weddings, and just put out your shingle. The only thing that might need a registration is if you do a name other than your own. You might have some registration issues in your state. And you're not precluded from having employees if you're a sole proprietor. But so if you have a very simple business with low risk, you work part-time perhaps or full-time, it's the easiest form of business. However, a sole proprietor is personally responsible for all debts and personally responsible for risk or liability. So someone falls or someone gets hurt as a result of your business, your personal assets are the ones that are going to be at risk. So
real quick, Barb, so I didn't interrupt you. So just so I'm clear and people listen here, if I am Navid Moosa, DBA, doing business as Mr. Save Home, or TA, transacting as Mr. Save Home, I go and I have a property that I own, and I'm walking clients through a property that's owned in my personal name or DBA name as a sole proprietor, and something were to happen, they are able actually to go potentially sue me on a general basis, like after my personal assets, things like my own personal home and car.
yes, absolutely.
So
Absolutely.
why would that even be considered then? Why would even people do that route?
I certainly don't recommend myself that people do that route. So yeah, I'm going to recommend to them, and I consider owning real estate to be a high risk business because the exact reasons you're talking about. A tenant gets hurt on your property, passerby gets hurt on your property. They're going to come after you personally. if somebody, for whatever reason, sometimes it's a financial reason, they can't get financing if they're a brand new LLC, even though you should have collateral. But in that circumstance, if you're in a high risk business and you're not an entity of some kind, get the best liability and casualty insurance that you can. And you might have covered this already, but make sure you're really well insured in that kind of situation. But I absolutely agree with you. Why would you want to do it if you're going to be in a high risk business? That's critical. The other thing too about that is if you have a sole proprietorship and you pass away, the business stops. You are the business, so there's no business succession. The business ends. All the assets are the only value that you have, and those will pass under whatever estate planning you might have. So there's really no business succession with the sole proprietor unless you make some other kinds of arrangements. So bottom line, it's okay for something very, very simple. It's not okay if you're going to own real estate in particular or any other kind of high risk.
But to your example, like the calligraphy person, you're doing wedding invitations, you write it out. Worst case scenario, you may misspell the person's name or something like that, or whatever.
Exactly.
Okay.
Exactly.
There's a market for it. It's just that it's not, like you said, it's the risk. The higher the risk, then stay away from this one and whatever, go from there. Okay.
Very good. And that's a great way to have summed it up. If you have a small, just doing something very small, it may not be worth financially, it may not be worth the cost of, forming an LLC or a corporation. But beyond that, as the risk rises, so does your liability. And so does your need for asset protection.
Okay.
Now let's say you have, you want to start that business and you want to bring somebody else in. Maybe you don't have the financing to get the business off the ground. You need to bring in a partner. Maybe you have the financing and the other person has the expertise. That's a common occurrence. So what do you do then? Well, you can form a partnership. You can form an LLC. You can form some form of corporation. Now, partnerships, just plain general partnerships. So anytime you have more than one person owning the business and it's not under an entity, it becomes a partnership by law. There are general partnerships. There's no really what we call formality in setting that up. Two people, we're going to call it Moosa Dietrich partnership. We're going to own property as Navid Moosa and Barb Dietrich. We want to own real estate in a general partnership. It's still going to be in our individual names. You're each liable for all the debt. You're liable for all the liability equally, unless you make other arrangements between yourselves. Profits and losses and things like that are split, as are as our debts and other bills. So you're not protecting yourself still. Now you have two of you who are open to the liability of the entire partnership.
Okay.
There are other kinds of partnerships that are out there. There's a limited partnership or an LP. There's in Pennsylvania anyway, there's a limited liability partnership. Just very briefly, what a limited partnership is that there is one general partner who takes on the liability, but generally they may own only a fraction of the partnership. And then the limited partners are covered as far as liability is protection because they're no management. They don't participate in the management. Basically, they have that interest, that partnership interest, but they don't have the management interest. So that's where they get that limited liability. Those are a creature of statute, as we say, depending upon your state. is going to determine how are those formed, how are they treated, and so forth. It doesn't totally eliminate the, any kind of exposure, but it does reduce the exposure. Most often you see those in the context of professional practices, for instance, lawyers, doctors, dentists, accountants, that kind of thing, especially the limited liability, limited partnership. And it can be useful for estate planning purposes. You have, you want to bring your children in, or you want profits or whatnot to go to your family members. That's might be an appropriate time to use a limited partnership.
And these exposures of who controls what, like a manager, is that all in the operating agreement?
And with a partnership, what it again, I'm not a big fan of partnerships either. But if somebody has a partnership or wants to do a partnership, then I strongly suggest that they go to an attorney and do a written partnership agreement that outlines all of those factors as between the two partners. Who's going to do what? What if one of the partners wants to get out? What happens? What if you disagree? What if somebody contributes more than the other? How do you determine all of those decisions that need to be made? And again, that's not something you're just going to pull off of the internet. That's something that's very particular to the two partners and their individual situations. One thing I didn't mention too is with a partnership, your tax return becomes a little bit more complex. You're filing a different type of tax return. As a partnership, you're filing with a partnership tax return, which is a little bit different schedule. It's a little more work to it. You talk to an accountant, they say, that's not so bad, but for most people, it might be a little more overwhelming or a little more complex. So again, you have a lot of the problems that you have with a sole proprietor. It's just two of you now sharing those problems. So again, using your example of you buy some real estate, you have tenants in it, and there's two of you in a general partnership, going to have the same problem. Now there's just more of you to sue. And again, can go after your individual assets. You don't pay a mortgage, they're going to come after you individually, because you're each individually responsible to the same degree as to third parties. Maybe not to each other, but go ahead.
By default, sorry, is that by default that each person has the equal amount of liability, or that can be shifted in any other way?
You can't shift it with respect to third parties.
Okay.
You can shift management responsibilities. If you take distributions or salaries, that part of it as between the partners, and you can have more than two, there can be more than two of you. That can be, kind of adjusted or customized, if you will. But the liability to third parties really isn't going to change unless one of the partners indemnifies in writing the other person. So really, that's within the agreement. It wouldn't be a true division. It would have to come through an indemnification of each other. So again, I'm not crazy about general partnerships. I don't encourage people. And if somebody comes to me that's in a general partnership, depending on the circumstances, I might recommend to them or advise them that maybe you want to consider converting that. Doing conversions like that can raise a host of other issues, so as title to the assets is concerned and taxes and things like that. But if you want a liability protection, it certainly is possible to convert that to another form, another form of entity.
Okay.
Mm-hmm. So that brings us to what I kind of think of as the heavy hitters of entity formation. And those are corporations and LLCs, limited liability companies. Corporations are the most well-known business entity, I think, to most people. They've been around for years and years and years. Corporations are a creature of statute. You don't exist as a corporation until you do the necessary state filings. So you can't just go out and hang a shingle and says, you know, I'm the Dietrich Corporation without having done the correct filings with your state. They may be various names. Most places, most states, I do believe, call them articles of incorporation. And that's what most banks are familiar with, that term, articles of incorporation. So you mentioned two types of corporations. There are actually several types of corporations. I won't get into some of the more the ones that don't apply so much to small business owners, but there are C corporations, and then there are S corporations. Now, the letter C and the letter S don't actually stand for anything.
That was okay. That was going to be my question. What
Right.
What does it stand for?
It's
What's incorporated corporation? C class. I was like, what's the difference if it's just a corporation? What's with all the designations?
well, that's a two-part answer. The corporation designations actually refer to the Internal Revenue Code. So those are really tax identifiers, okay? Whereas if you're talking about a corporation, you're talking about a creature of statute. You can be a nonprofit corporation, you can be a business corporation, you can be a stock corporation, you can be, there's a thing called a closed corporation in Pennsylvania, or a closed corporation. It's going to depend on what your state calls them. Again, that's why I say it's a creature of statute as to what kind of corporation in general you're forming in your state. Now, if you're going to be a C corporation or S corporation, you're going to be either a business corporation or a stock corporation. And that's one of the hallmarks of what a corporation is. But to go back to your question about C and S, what they stand for, it stands for subchapter C or subchapter S of the Internal Revenue Code.
Okay.
So yeah, there's no secret to what it is.
Well, okay, so X doesn't really stand for
Nope.
or state or anything. It's just within the IRS's code book. Someone put a letter and put a chapter in that letter and said, "Here you go." And they said, "Okay, this is the designation. That's it. We're done."
That's, you know what, that's how they got their names. Yes, what they do, and what the words that follow that subchapter S description is different, and that's where you get to the meat of it all, as the difference.
Yeah, sorry. So I think a lot of people I encounter, right, when they're talking about starting their business, having a business, the very first thing they say is LLC. And when you think of S Corp and C Corp, you're like, oh, I'm not that big. I need to have, and I don't know where these numbers came from, but you hear people, I need to have more than 100 employees or more than 10 employees to have these things. And I'm like, I don't think you do. I said, I'm not sure where that came from. So have you ever heard of things like that, or people have these myths or these, grandma tales of you have to have these numbers to get this kind of designation?
No, there really isn't any numerical requirement per se. You can have an S corporation with a single member S corporation. You can have, now whether or not you want to have a single member C corporation, I honestly have to say I'm not sure if you can even have that. But as a way to kind of differentiate between the two is, if you have an S corporation, it is a much more restrictive type of corporation. as far as who can be a shareholder or a stockholder. So with an S corporation, you can only have individuals be shareholders. There's a small carve out for certain kinds of trusts, which really don't truly apply in most cases. But so you can have only individuals as shareholders, and you can only have up to 100.
So when you're saying, so Barb Dietrich can be a shareholder of Mr. Saber Home S Corporation, for example, but Dietrich Law LLC cannot be a member of my S Corporation.
I cannot be a shareholder of your S corporation, correct, as an LLC.
LLC, okay. Even if the LLC was owned by just you, if you're a single member LLC, you still can, because you're using an entity name, or if you're using an individual name, you can belong to it. Is that?
If I'm an individual, if I am what we call a natural person,
Okay.
the only natural people can be shareholders in an S corporation.
Okay.
And that's what really distinguishes it from a C corporation in one respect. C corporation, you don't have that restriction on who can be a shareholder or a stockholder. So maybe the 100 number came in from the limitations on S corporations, because you can't have more than 100 shareholders. You can't have more than 100 people be the owners of an S corporation.
Okay. Any
I mean,
reason why you can't have more than 100? I mean, is there?
it's a little thing called the Internal Revenue Code.
Okay. And Cody.
No,
that's
I
fine.
know.
I didn't know if there was, like, at one point in time there was some kind of math or number behind it that said, hey, we used to allow 1,000 or 500 or 125, whatever it is, and now we're down at this here. This is the limit. But okay, I mean, it is what it is. If that's what they're saying, then.
Right, exactly. And without getting into legislative history,
of course.
Congress decided that that's what it's going to be. There are other tax differences too between the two, and I think that has a part of the limitations on the S corporation that you don't have with the C corporation. The other important, I mean, there with the corporation, you have the owners of the corporation are your shareholders. What's sometimes a difficult concept for folks is that the corporation itself is what we call an entity. It has its own tax number, tax identification number. It has to have a tax identification number. Whether you're a C Corp or an S Corp, you're not going to get a bank account. You're not going to get a loan or a mortgage. You won't be able to buy anything without that tax identification number that's unique to the corporation. The individuals who own the corporation are the shareholders, and they own shares of stock. Like, I think what we're familiar with, if you go on E-Trade and you want to buy 10 shares of AT&T stock, it's the same concept. You're an owner of AT&T, however minor that amount of ownership might be, but it's the same thing with both the C Corp and an S Corp. So your ownership is determined by the number of shares of stock that you own.
So and again, we'll just use Mr. Saber Home as an example. Mr. Saber Home is S corporation. I have 1,000 shares of stock available for ownership, basically, and you buy some. The minute I give more than 50% of that stock, right, 500 shares, 501, 502 shares sold to somebody else, whether it be one person or multiple people, I'm no longer the owner of my own company, right, at that point in time, because the shareholders own more than majority. Is that accurate or?
Not exactly.
Okay.
Not exactly. That situation is going to come up when you have an LLC, and I'll go more into detail with that. Okay. One difference with a corporation and again, I'm just really going to limit it to S corporations
Yeah, that's fine. That's fine.
at this point. Is the corporation when it's created, and one of the things I'm going to ask somebody when I help them create the corporation is how many what we call authorized shares is the corporation going to allow. So in your example, Mr. Save-A-Home has incorporated, has authorized 1,000 shares. You know, it may issue only 10 shares to you as Navid Moosa as the shareholder. It may issue, excuse me, 5 to me, so that it doesn't have to issue all 1,000. In fact, it's probably not a good idea to issue all of the authorized shares,
Yeah,
because you know, you never know what's going to happen in the future. So it's the difference between authorized and issued. So you can have, the company has authorized 1,000 shares, but the shareholders or the board of directors are going to determine how many they want to issue to each shareholder. And that, and each share corresponds in an S corporation to a vote. And it also corresponds to other factors such as you know, profits, losses, things like that. So it's the number of shares. So if you want to maintain control of your corporation, in addition to being on the board, but to as far as ownership is concerned, the majority doesn't have to be 500. It can be 100, but everybody else can own 50. Or you want to bring somebody else on, the corporation can issue you more shares, so that you don't necessarily lose that that ownership. I don't say advantage, but the percent of issued shares, and therefore the number of votes can be you know change. It can change in any number of ways.
Okay.
So does that kind of make sense?
No, it does. It just make no. It does. It does make sense because I was thinking of a different way, but you broke it down better. So no, thank you. I appreciate that.
Sure, sure. The corporation has, in addition to shareholders, it's going to have a board of directors. I mean, it's a requirement to have a board of directors. That's who manages the company. You're, you know, as a shareholder of I had 10 shares of AT&T, I'm not going to tell the CEO how to run this company, but the board of directors or the board of trustees, in I think in some cases, they're the folks that make the decisions for the shareholders, but the shareholders elect the board of directors. So that's where their control comes in. They don't like the way somebody's doing something, they can elect to have that person no longer on the board of directors. And shareholders can be board of directors. All the shareholders can be. They don't have to be. You can have somebody on your board of directors who's not a shareholder, but they're the ones that are going to make the decisions. And then the board of directors then appoints your officers, president, secretary, treasurer, and so forth, who handle the day-to-day ins and outs of the corporation.
So for those who are listening to this now, I mean, obviously if you're a small business owner, startup, don't be intimidated by the talks of shares and presidencies. I understand though that we have these discussions for growth. We have these discussions because shares are a way to maybe build your business, get investors to invest into your company, and you could potentially have shares out to them. Now those are, you know, I probably should have said this at the beginning of the episode, it's not tax advice, not legal advice. We're just talking about a general conversation here. But I don't want to discourage anybody saying, well, I'm not there yet, this is not for me. No, I want you to think this way. I want you to think future growth, that, hey, I'm just not doing this just so I can just have a safe haven. That's it. I'm doing this for growth. I'm doing this so my kids, my significant other have something to have when I'm gone after this said and done. So you need to have these discussions. You need to have the discussions of how do I grow this business? You know, and a lot of these are tax questions. I get that, you know, which we'll do a different episode with the CPA, but the information we're getting here, guys and gals, about everything Barb's given us it's a breakdown of how your business should be set up, because when I first started, I just thought I knew everything. I went online, Googled it, whatever, and that was it. But it wasn't. And then Barb came into my life, and a CPA came into my life, and it was like, hey, listen, we got to bring this in. We got to rein this in. Have you thought about this? Have you thought about that?
Hmm.
Honestly, it's kind of hard, right? Because you're building this business and you're thinking you're just doing your job, and you are, but you're building a brand. You're building something that's hopefully lasts generations after generations. So you want to protect it. All that hard work, goes in. And so again, having these discussions of how to set your structure up. I personally don't like setting up something just for 10 days and having redoing it 10 days later. Let's set it up for that 2, 3 year growth from the door. Let's just do it that way. And that way, you know that the ceiling is not so low. That ceiling is high, and you can grow it into as much as you want. So no, this is it. I love the breakdown that you're giving personally. I love it. I know a lot of the people who email the show and I talk to in general, some of them are intimidated because they don't know this stuff. They do not know these items. They just think, well, I don't want to be an escrow, that's too big. No, you'd be surprised how being that can help you grow. So you can get to that spot there, and do that from the door.
Absolutely, absolutely. I have more single shareholder S corps than I probably do multiple member S corps.
Wow. Okay.
Yeah, and you could, you raise a good point about your family. Let's say you want a husband and wife. Um, they can become the shareholders. You can bring in, a lot of situations is if you're going to do business succession planning, you want to bring your kids in. They want to run the company. Both LLCs and S corps are the perfect vehicle for doing something like that. You want to transfer shares to your children. Um, if you have more than one shareholder, I know I don't want to get too complicated, but this is one point that can't be overlooked, because I've had too many clients just put it aside. And that is, if you have more than one shareholder in a corporation, you need to have a shareholder agreement, because that tells you not only how profits and losses are divided and distributions and so forth, but from my point of view, it's how do you transfer shares? What happens when somebody dies? What happens if somebody becomes disabled? What happens if somebody wants out? How do they get paid? How does the corporation, pay them, or their estate? Um, those things, that discussion when you have more than one person, it is so critical. And the same holds true for an LLC. I know we haven't really touched on the LLC. A lot of the things concepts are similar. They have different, nomenclature. Um, but an operating agreement in an LLC does the same thing. And even if you're in an LLC, even if you're a single member LLC, you need an operating agreement. The other reason for that, even a single member, is because a bank is going to look for it. So you want to open a bank account, you want to get a loan, the bank is going to look at your operating agreement. And a corporation is going to look at your bylaws, which is another requirement in at least in Pennsylvania, that you have bylaws. And that determines the relationships and the authority to act in the name of the corporation. You can't, and another really key point is that you can't commingle. You can't use your corporation's bank account to go buy your family's groceries. You can't pay your kids' little league fee out of your corporation, unless you're sponsoring the whole team, of course. But you can't mix the two.
Yeah.
So that is because you are going to lose all your liability protection if you treat the corporation as your personal pocketbook.
Yeah, and I mean, we hear it all the time, white collar crimes, if you will, and stuff like that. When you hear these kind of things,
Right.
discussions, and it is kind of not you're saying this. It's almost like, again, when we in April, when we did the talk, we had LLC creation and so on and so forth. But we also talk about taxes and CPAs and stuff, and it's really not to hear you talk about it, how those two, it's everything, right? If like you said, you pass away, or if you do this illegal transaction or do something, you choose your own personal pocketbook, but then the liability opens up. Then if you have your family not insured properly, the liability can go on to them. And then if your books aren't, I mean, it can just be this big
Yep.
convoluted, just
Yes.
get out of control really, really fast. You know, so I mean, I guess I already knew it, but now hearing you talk about it like this, we talk a lot, I get that, but we don't have these kind of discussions all the time. But I can sort of see why even some new business owners get scared before they even started, right? Because this sounds scary.
Hmm.
It is.
Correct.
But those hard, scary discussions have to happen. You
Yes.
have to have them, because if you don't, you're just putting your head in the sand. That's all you're really doing. You have to have them. But what I don't want people to do is get discouraged at the same time. These are truths. These are necessary evils, if you want to call it that. But they have to happen in the sense of where you need to know, you need to be full disclosure with your significant other and saying, this is the business format. Here's how we're going to do it. Don't try to go behind their back, and talk to them about it, you know? And so when you have, even if you don't, you bring on a partner. If you're a single member LLC, like you said, or a single owner company, you bring on a partner down the road, and your partner's vision is just different. And they're not a partner as in 50-50 owner, they're just an employee of yours or something like that. They essentially are representing your brand when they're going out there. And
Correct.
if you're not properly structured like you're talking about right now, you give it, excuse my French, have your ass handed to you. You know what I
Hmm.
mean? You really could have that happen to you. So you really got to be careful. So um no, that's some, it's some really good stuff. It's a lot. I know it's a lot to take in, and yeah, for a lot of people listening to it, it is a lot. I get it, but you know, one reason why we love podcasts is you can listen to them over and over again. You can pause them, stuff like that. Um, I know we're kind of running low on time here. That's because I was asking you questions in between, so that's my fault. But could you kind of talk about, and I want to address the LLC because that is the most common thing I hear all the time. So if you could talk about the LLCs and just why it's more popular, if you think it's more popular or not, and kind of go from that, I'd appreciate it.
Sure. Sure. LLC, limited liability company, like a corporation, can only be created by statute. A certificate of organization, you file, some states call it an article of organization. So you
Okay.
have to file that before you can exist. You can have as many members. There's no limitation on the number of members or types of members, unlike the S Corp. You can have an LLC, and your LLC can become a member of another LLC. So there's actually two levels or two layers of liability protection. You can have virtually anything can be a member of an LLC. Again, there might be some state restrictions. So that's one of the biggest reasons, the flexibility. LLCs are more flexible
Gotcha. Okay.
than an S corporation, for example. And now Pennsylvania is a little late to the party in accepting the liability protections of a corporation and giving those to LLCs, but that changed in 2017 when the law was updated. So one time we were a little hesitant to recommend LLCs, but now again in Pennsylvania, if you've adopted a version of the Uniform Limited Liability Company Act, then that asset protection is going to be there with an LLC, but they're much more flexible, and that's why people like them. You don't have to have necessarily a board of directors. You can have members run the company, and that's another factor that you can have a member, what we call member managed, or you can have manager managed, which is a formal relationship. You can, the one thing, and you kind of alluded to this when you're talking about the shareholders, the number of shareholders, the membership interest in an LLC is a max of 100%. So it's set up on a percentage basis.
Okay.
So it always has to have the members totals always have to be 100%. So if you and I are 50-50, that's fine, but we may not just, maybe we want to do a woman-owned business and I own 51%, you own 49%. You bring in somebody else, you're going to dilute your membership interest.
Now you
And
could
that's
be 50 owners, but one of the members is the managing member. He or she would have the say of signing like a tiebreaker. Is that?
And that's something you decide in your operating agreement.
Okay.
You decide how you're going to break ties if you're 50-50, or you make it not 50-50.
Yeah.
There's more flexibility in distributions. One thing I didn't touch on is what we call capital contributions. Who's contributing what? Is somebody going to contribute property? Is somebody going to contribute money to get off the ground? Is somebody the money person? Is somebody the expertise person? So there's a lot more flexibility in an LLC, and that's why they're so popular. The one downside to an LLC is that you're subject to self-employment tax, and I'm sure your CPA will touch that a little bit more, and that's why some companies or why some LLCs are electing, which is again a recent development, electing to be taxed as an S corporation. So they function like an LLC, but their taxes are treated like an S corporation.
If you had to give a number as opposed in regards to, like I said earlier in the episode, you also set up companies, right? You file tax IDs and stuff like that to create the EIN and stuff like that. If you had to guess, what is the number one company structure you would see for small business owners? Is it LLC? Is that in the case, or is it sole proprietorship?
Overwhelming. Well, so generally, I don't get the contact with the sole proprietors until there's a problem.
No.
So I apologize. So overwhelmingly, it is LLC for small business owners.
Okay. And so we're gonna wrap this up here, but with the audience being small business owners, one employee, one self-employed, if you had to give, 3 words of wisdom or three sticking points to someone starting up, what advice would you give them?
Get an attorney, get an accountant, get a good insurance agent.
There you go.
I can't stress that.
No,
Yeah,
listen.
and the fourth one is don't rely on internet, LegalZoom, anything like that. Sorry.
It's funny. No, listen. So we're gonna be talking to my CPA, and when I asked him, I said, "Hey, what's the difference? Like, how can you say?" He goes, "Well," and he put it this way. He said, "H&R Block has good, solid, hardworking people, but they didn't go to school to be an accountant." He was like, "So that's the difference. So it's almost like an attorney, where you can get on LegalZoom and fill out that questionnaire and get this nice shiny packet with the embroidery. I've seen them, stuff like that. But when you need to speak to somebody, you have to go into a queue, right? This is why I encourage everyone who I deal with in locally, if they ask me, who do you deal with? I give them your number, and I just say, listen, he's my attorney. She's who I talk to for estate planning, everything that, my wife and I built. She has all that covered for us. I don't know if she can help you because we're located at, but at least she can put you on a path saying, think about these when you're talking to your attorney or looking for an attorney in your area. These are questions you want to ask, so that's why I wanted you on, and I wanted to speak to you. I wanted you on. I only know what I know. I try to stay in my lane and focus on what my craft of real estate and investing and stuff like that. For the legal stuff, that's why I have you saved in my contacts. And I have you on my speed dial and stuff like that, just in case, you've helped out family and friends of mine and other clients. You've done, we're doing transactions now as we speak with documentation. But anyways, thank you very much, Barbara. I really, truly appreciate you coming out for taking the time on this. I know you're busy just as everyone else is. So do you want to give like information out, like a phone number or something like that? If anyone has any questions, a website or anything, or it's up to you.
I don't have a website.
That's fine. That's fine. Don't worry about it. But
Yeah, I mean, if somebody has some general questions, if they send you something, I can't give legal advice through your website, of course, but my advice would be to look for an attorney in their area.
Gotcha.
Yeah, or to go to their the local bar association and ask, for a lawyer referral, ask, I won't say friends, but ask people who are in business.
Yeah.
Say,
And that's how I came across.
that's
That's exactly how I came across you. I came across my insurance agent the same way. It was going to these groups and saying you got to talk to so and so there and stuff like that. I said, okay, fine, that's what I'm gonna do, and it's been a great relationship since. So, again, everyone, thank you for listening in. If you're listening to this on podcast, thank you for watching. If you're on YouTube, thank you, Barb. Everything as always, you've always been a good friend, a mentor, and helped me out every single turn for my business. I greatly appreciate you for doing this. As I end every show saying the same thing, take care of the client, everything else will fall into place. It's pretty simple as that. Just take care of your clients and everything else will truly fall into place. Thank you, Barb. Again, I appreciate
welcome.
it, and I will talk to you soon. Have a great weekend.
You too, Navid.
Take care, Barb.
Thanks.
Bye.